we're going to look at the top 5 quality growth stocks to buy right now, according to Joseph Carlson. Now, I don't want to watch this video. I think his videos are incredibly boring. So we're just going to skim. We're going to skim and we're going to look at the ones that he's talking about. So first on the list, first stock he covers is Amazon. So let's do this. We're going to go through and I'm going to give you my analysis on each one of his stock picks. And I'm going to tell you what I think about it. So first, let's go look at Amazon. So let's go over here. Let's type in Amazon. And let's take a look at Amazon in Outlier. So first thing to notice is that it is sitting on a buy signal. Now you'll notice the background on Outlier is white. That means it's not got a bullish trend and it's not got a bearish trend. It's in between the two trends right now with the buy signal. For Amazon, the fear and greed has been going up. Right? Less fear, more greed. That's what we want to see. Same in the sector. Less fear, more greed. And if we pop this open here, we can see Amazon sitting on neutral, where XLY, the discretionary sector, is sitting decently in the greed. Now, one thing to notice right here is the breadth of the sector. Now, what does breadth mean? Breadth shows you how many stocks in each sector, right here on the page for you, how many stocks in each sector have buy signals. Now, more stocks with buy signals means the whole sector is going to get raised up. And you should care about that. You should absolutely care about that because the move that you are wanting in your stock, 70% of it has nothing to do with the stock itself. 40% of the move that you're looking for is coming from the market. 30% of the move that you're hoping and praying for is coming from the sector. And only the last 30% is coming from the stock itself. So you want to make sure that the stock is set up, that's 30%. The sector is set up, that's another 30%. And then the market set up, that's the last 40%. But what I see right here is that we have peaked on market breadth and it's starting to come back in. Now, if we have less and less buy signals, that means more and more sell signals. So the sector could potentially be coming back down. Not only that, but when we go to the full stock list, all the stocks that we cover, you can see we're about to have that bearish crossover right here on the full stock. So breadth is waning in the sector, breadth is waning in the market. Now, why do we care? Why do we care? This is what I call the master key, and it allows you to know what the market's telling us, okay? So we just decided by looking at the market breadth and the sector breadth that those are not very bullish. Now let's look at the market trend. The market trend will tell us which direction the market's going right now. It has the 10 over the 20, prices over the 50. That is what I call the Outlier Trend Template. When the 10's over the 20, prices over the 50. So this is a bullish trend right now. A weakening bullish trend. As you can see, it's pulling back, but still a bullish trend, no doubt about it. Next, the SPY buy or sell signal. Now, I really, really care about the SPY having a buy or sell signal because it has a buy signal. That means the market is telling you now's a great time to get in. And we do have a buy signal on the SPY. So looking at Amazon, what do we see? We see the SPY has a buy signal that came on, what day did that come on? April 25th. The market trend is bullish. This market breadth and sector breadth are not working in your favor. So the master key is not unlocked for everything. But let's say that you're like, that's fine. I don't care about the master key. Chris doesn't know what he's talking about. I just want to buy Amazon stock today. So it does have a buy signal. It came through April 25th. Let's look at it on the chart over here real quick. Amazon. Yeah, this does not look great to me at all. All right, we don't have the 10 over, or we have the 10 is over the 20, price is below the 50, but it looks like it's about to cross back down the opposite direction. So right now, it does not look like a wonderful time in Amazon. There are probably way better stocks out there to buy than Amazon. Amazon is at the same price as it was in September of last year. So how many months ago was that? 8 months ago? The same price that it was in April of last year. So Amazon is literally at the same price it was a year ago. Amazon is at the same price it was a year ago. And this is why I say all the time, all stocks are bad. Even Amazon is a bad stock, but every once in a while it acts right. The thing is that you need to listen to what it's telling you. And right now, Amazon is telling you, I'm not acting right. I'm not acting right. In fact, if you look at it right here, this looks a lot like the market cycle. What is the market cycle? On my slide here. This is the market cycle. You've got your stage 1 consolidation, stage 2 uptrend, stage 3 crossing at the top where all the moving averages start crossing over, and stage 4 downtrend. and then it repeats, right? This is stage 1, stage 2, stage 3, stage 4. Looking at Amazon, that looks a lot like it, doesn't it? Does Amazon not look exactly like this? That's pretty crazy, huh? It's almost like I know what I'm talking about. So right now, I think Amazon is definitely within a stage 1, but that does not mean now is the time to get busy. Now is not the time to get busy on Amazon. So that's the first quality growth stock to buy right now, according to Joseph Carlson. Let's look at the next one, Meta. Meta. All right, looking at Meta stock here. Does have a buy signal. Now, this one is already looking better to me. This one's already looking better to me because within a glance, we can see the green overlay telling us that the Outlier Trend Template is telling you it's trending higher. That's what you want, right? Listen, if you're one of those people who have said, I'm only going to buy the dip, the problem with the dip is that you don't know where the dip stops, okay? Stop trying to get the top 10%. Stop trying to get the bottom 10%. Right? You're not going to catch the top. You're not going to catch the bottom. If you can get the 80% in the middle, you can make so much money. So stop trying to buy the dip. Let it tell you when it's changed course, when it's changed direction. And you do that with the Outlier Trend Template with the 10 over the 20, price over the 50. Now, it is getting more greedy. That's what we want to see. The sector, communication sector for Meta, getting more greedy. We can pop this open. We can see where these are lying right now, both somewhat in the neutral to greedy category here for the communication sector and for Meta. And again, we had a peak on market breadth and it's come back down in this sector. Nothing's changed from what we talked about in Amazon, right? This particular sector, market breadth has peaked and is pulling back. The sector, market breadth hasn't changed. That's just the market's breadth. Sector breadth, even though we went from the discretionary sector over to the communication sector, it's also peaked already. Market trend still pushing higher. SPY signal is still at a buy. So let's look at Meta's chart real quick. Down 2% this morning. Let me remove a couple drawings on here. Remove a drawing. Oh, it just had earnings a couple days ago. Cool. So here's what I want to talk about. It's called a gap and go. So earnings happened on April 30th. You see right here, it gapped up. Now, it closed down on the day, but that doesn't matter. What you're looking for is the bottom of that candle. If price goes under the bottom of that gap up candle, that's called a gap and crap. Right now, what we're seeing is a gap and go because it gapped up and it's continuing to go. How far can it go? We don't know. We don't know. But right now, this is a way better opportunity to me than Amazon was. But then again, remember, you've got the market breadth and sector breadth working against you. That's important. You keep that in mind. But this one looks a lot better. Let's go to the next one. Salesforce, CRM. Let's go to Salesforce, CRM. Now, this is the type of analysis that I would do. This is the type of analysis I would encourage you to do. Look at the stock, figure out which direction the price is telling you it's going. Because you want prices to be going up. I know it sounds crazy, right? We're used to buying things on sale, right? Let's say you wanted to buy a bullhorn and you're like, well, I don't want to buy it if prices are going up, right? Because this is a consumable. We don't expect to be able to turn this around and sell it for a profit, right? Even when a small-time YouTube celebrity like me, a very random guy on the internet like me, is using this to make a point, it doesn't make it more valuable, okay? It does not make it more valuable. Now, if you're buying an asset like a home, you do want it to be more valuable. You want what you're buying to go up in value. That is an investment, a consumable versus an investment. Okay. We want the investments to be going up as we buy them. Think about it this way. If you are buying a home, and you're moving to a new city, let's say you're moving to Warren Buffett just retired. So let's say you're moving to Wichita, Kansas. So you can be closer to old Uncle Warren. And you see that Wichita, Kansas actually doesn't look that great anymore. In fact, Wichita, Kansas isn't looking all that great at all. I mean, they just shut down the Home Depot. Texas Roadhouse went out of business. The last Starbucks in town is looking real sketchy. They're letting people camp outside of it. I mean, I'm probably talking about like Washington and Oregon State right now. But we're talking about Topeka or Wichita, Kansas, for example. They're letting people just camp outside and use the restrooms at Starbucks. And you're like, I don't know about this. This doesn't look like a great place to live. But let's say you went to Joplin, Missouri instead. I don't know. I'm just throwing out names. let's say you go to Joplin, Missouri, and you're like, oh, it's not that far from Kansas, and they just built a new Costco. They just installed a HEB. I don't know if they have HEBs in Missouri. They just put a new HEB, and there's 2 new Starbucks opening around the corner. And look, they got a Texas Roadhouse. You never can look down on a place where they open a Texas Roadhouse. But if they're closing Texas Roadhouses, you know there's a problem. So they just opened a Texas Roadhouse. And you're like, you know what? Joplin, Missouri sure looks like a lot better place to live and grow a family than over in Wichita, Kansas. Because my investment is probably going to increase in value when I buy my home, right? It costs more than it did a year ago before they put in the Texas Roadhouse. But now today, prices for all the houses are going up. And you look over at Wichita, Kansas, prices for all the houses are going down. You tell me, which would you rather put your money into? Same concept in the stock market. Same concept in the stock market. You want to be buying it as it's going up. You don't want to be buying it as it's going down. Okay. Because here's the deal. Some jokers on the internet will tell you to buy stocks as they're going down, but I gotta use it, right? Profit follows price. And you're not going to get paid if the price is going down. Profit follows price. And everybody wants to profit, right? I don't know one person, unless you have like some sort of mental deficiency or you just love getting sympathy from other people. I don't know one person who gets into the market with the intention to lose money. Some people like to do that because they like to get the sympathy from other people. I don't. I like to have more money in my account than I did yesterday, right? And I'm only going to do that if the price of the stock is going up. So the price of the stock on CRM is going up, right? We see it is with a green overlay, meaning the Outlier Trend Template's looking north. We got a buy signal, getting less fearful, more greedy. The tech sector getting less fearful, more greedy. Popping this open, we can see it's gone from the extreme fear to the high point of fear, almost to neutral, where the XOK, the tech sector, is certainly in the greed, and that's what we want. We want to see that. But of course, when market breadth peaks, that means less and less stocks are having buy signals. More and more stocks are getting sell signals. So let's take one more look over here on the chart, see if anything else pops out for CRM. Yeah, CRM. Oh, you know what? Not quite over the 50-day, but it's really, really close. I thought it was over. One thing to note is that it does have an order block up here around 285. Order blocks are areas of support and resistance. Now, this is an area I would totally be interested in it if it closed over the 50-day up to around 285. So that would be about how much percent? 3.6%. You can make $10 out of it before it hits that resistance. Yeah, I would be super interested in that once it crosses over the 50. So it's got everything working for it except for the breadth. And listen, the breadth means a lot. Don't discount the breadth. Next, let's look at ASML. ASML. All right. So let's go to the 3-month. Now, again, 10 over 20, price over 50, green overlay, but it looks like it may have contracted and might have a white overlay at the moment. Buy signal on ASML. Less fearful, more greedy. Less fearful, more greedy in the tech sector. Again, tech sector breadth is peaked. Pop this open. We can see the same thing here. ASML is starting to get into the greed category. The greed on the tech sector is looking strong already. This is what you're looking for, right? You don't need to go through 10Ks. You don't need to go through P&L statements. You don't need to go look at their free cash flows. You don't need to look at their earnings per shares. You don't need to look at any fundamentals because the fundamentals, they come out once a quarter. So 4 days a year, you're basing your trading strategy on. Give me a freaking break. The other 99% of the time, you don't care. You should care. You should care a lot because a lot can happen in those 99% of the times when you're not looking at the other 89 days of the quarter. But right now, ASML looks pretty decent. Looks pretty decent to me. But of course, remember, watch the market breadth, watch the sector breadth. So ASML is not so bad. So to recap, Amazon, I didn't like that one. Amazon's got a lot of faults for me. Meta, not so bad. Salesforce, not so bad. ASML, not so bad. Let's look at Duolingo. DUOL. You know, what'd been really cool is that they had the Duolingo stock ticker is OWL. I would have loved that. Okay, check this out. So on Duolingo, a buy signal came on April 23rd, getting way more greedy, getting a little bit more greedy in the tech sector. Again, tech sector has peaked. Let's look at this buy signal, however. April 23rd. April 23rd on Duolingo, D-U-O-L. Good gravy. All right, buy signal came April 25th or 23rd. I don't remember. 23rd. Solid buy signal right there. Solid buy signal. Now, one thing that I do like to trade is up into earnings. This was the earnings date right here, and this is the jump after that. I don't like to trade earnings because we can see jumps like this that are awesome, but we can also see gap downs, which really suck. So I love to trade up into earnings, and this is why, right? It's the buy the rumor going up into earnings, and that's exactly what we saw right here. Now, how much did it go up during that time? Just up to earnings. It went up 8%. Are you kidding me? $30? Dude, that's a great trade right there. Earning 30%, or I'm sorry, $30, 8.26% since the buy signal before earnings. Now, let's say you held through earnings. You got bigger cojones than I do. Let's say you held through earnings. You'd be up 31%, $115, give or take right now. That's crazy. That was a remarkable buy signal right there. Huge buy signal. Now that it's gone way up, its fear and greed is at 95.87. That is extreme greed. That is extreme greed. This is what I want to warn you about. When you see an extreme fear or an extreme greed in a stock, be ready for a snapback. Right here, you saw extreme greed down at 2, and then the price was at 272. Very quickly went up to 340. Right? How big of a move was that? That was from here to here. It was a 21.43% move in the span of 2 weeks. 21% up move in the span of 2 weeks when it peaked on fear. Now, or peaking at greed right now. What's going to happen? I don't know, but I'll tell you one thing. I am not interested in buying Duolingo right at the very top right here on fear and greed. I would be way more likely to say Duolingo's due for a snapback. Duolingo is due for a snapback any moment here. So, well, yeah, I do want to trade with the trend right now. That's a lot of risk for me that I wouldn't be interested in. But, you know, a decent pick, the fact that it is going up in value. Is that 5 stocks? We had Amazon, Meta, Salesforce, ASML, and Duolingo. There we go. Perfect. Now I want to help you out. Put in the chat some stocks that you want to look at. Put in the chat some stocks you want to look at, long or short. And let me introduce myself real quick, because I am just a random guy on the internet, right? But I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And starting next week is one thing that I'm so excited about: Outlier University.
Are you ready? Are you ready? Let's go! Let's go! Respect, respect, it's earned, it's earned. Respect, never given, never given.
That's right. Starting next week, the fighting monkey donkeys of Outlier University. I will be teaching you literally everything that I know, start to finish, top to bottom, inside and out. That's what we're going to do for you, free here on YouTube. You do not have to pay $9.97. You certainly don't have to pay some weird looking guy who looks like a vampire has a weird accent $7,000 a quarter, or if you want options, $14,000 a quarter. So basically, there are people on the internet who want to charge you $84,000 a year for what I'm going to teach you for free starting next week. Now, this is a 9-week program. Our alpha group has 10 gentlemen lined up to be here live every afternoon on Tuesdays and Tuesdays and Thursday afternoons, 3 p.m. Eastern time. And I will teach you everything that I know at Outlier University. And everybody gets to watch and learn for free as a monkey donkey. As a monkey donkey. I don't know if I like the phrase as a monkey donkey, but it's still kind of fun. The fighting monkey donkeys of Outlier University. So Jeff Bezos says, what's the Outlier mascot? The fighting monkey donkeys. How fun is that? And, you know, our rival school is the Joker Academy. Our rival school is the Joker Academy. We're going to take down the Joker Academy. Don't worry, it'll come back, right? The Advanced Money Destroyer. Man, we're going to have so much fun with this Outlier University. I hope you guys are so along with the ride, because this is going to change lives. I'm so stoked about it. Georgia, Give me a break. What do you, I'm gonna have to charge you a tip for working that hard, but I'll work for you, Georgia, just for you. Nobody else gets to put 3 in the chat, just Georgia. Let's start with BJ. All right, BJ sitting on a buy signal and a green overlay, meaning it's in an uptrend. That's what we want to see. We've got the stock getting more greedy. We've got the staples continuing to get more greedy, but it looks like staples may have peaked on the fear and greed right here. In fact, it did 55.57 down to 55.53. This is taking an average of all the stocks in this sector and plotting them right here. Now, also, Georgia, be aware, sector breadth for BJ's has already crossed bearish. That's a big red flag for me. So looking at this, I see good trend, good buy signal, good movement on the fear and greed. But then when the staples, we're looking at the sector, not looking so hot to me. Let's look over here at BJ on the chart, see if there's anything else that we need to look at. No, this looks pretty sharp. So here's the deal. You've got some positive factors, you've got some negative factors. So of course, what I want you to do, Georgia, is weigh the risk that you have before you right here. I don't see a lot of headwinds. Okay. Let's also take a look at her next one, BEKE. BEKE. And look at here, buy signal within an uptrend. Not very greedy. I mean, it's been really flat between the fear and greed for a minute. The sector, this is the real estate sector, is getting less fearful, more greedy. Again, sector breadth is peaked. This is going to be the same story over and over on sector breadth because sector breadth has peaked. And I'm telling you guys, watch for that. Watch for the contractions. It may not be a crash, and I'm not calling for a crash, but what I'm saying is the strength is not there behind it, especially on BEKE. You've got 2 closes under the 10 EMA right now. Those are 2 closes that would be considered closing signals for me if I had trades. So I would be extra cautious on BEKE. Next, let's go to Costco. I went to Costco a couple days ago. I bought strawberries, grapes, and what else did I buy? Toilet paper, right? The giant thing of toilet paper. And I managed to get out spending under $50. That was the lowest price purchase I ever made at Costco. Of course, I had to get the hot dog on the way out too. I got myself a hot dog and I got my son a slice of pizza. So maybe it was about $50, but still best deal I ever had at Costco. Now, everybody else is also shopping at Costco because it has got a buy signal. It has the 10, 20, 50 pointed north. It's $1,000 stock now. That blows my mind. I just remember it being a $500 stock, and it's doubled since then. Getting more and more greedy. That's what we want to see. Still the staples sector peaked and is contracting slightly. The staples sector breadth has pulled in, and let's go see if there's anything else on the chart to see. Looking sharp. You got a bit of a way, so to 1,062. So you've got how much room to here? You've got about 5% to the upside before it runs into an order block. Earnings are a couple weeks out. So again, has some positives, have some negatives here. So of course, know your risk is at. Georgia, thank you so much for that. Corey wants to look at PM Long, Philip Morris Long. All right, let's see what pulls through for Philip Morris here. So it is certainly looking bullish. We got a buy signal that came on April 15th and has really run since then. Now it's getting very greedy. Remember, when it gets very greedy, look for snapbacks. And you can see over here, it got up to like 98 out of 100. 98 and 89 was the peak on the greed. And look at that. It pulled back. How much did it pull back after that peak right there? It pulled back about 3.5%. Not a huge pullback, I should say. Not a huge pullback, but it definitely snapped back. And then nobody was super greedy for a while. Buy signal came through April 15th and has certainly run since then. Actually, what I want to do is look. Oh, no. I can measure that right here. I'll say, let me measure it on the other chart. But looking from here to here, it's a good 8% move, a $14 move, almost 9% move since that buy signals come through. But it's getting really greedy right here. Staples again peaked and is starting to contract slightly. Staples breadth has pulled down a bit. That makes me nervous. Let's go over here to PM. Looking strong though, looking really, really strong. Now also for some strength is you have a order block underneath it, right? So if it does pull back, you might be able to catch some support on this order block right here. A really, really strong support. Outstanding. Let's see. Skinny buff guy, because he's the one making all these awesome memes. I will do one for you, my friend. Crowd, CRWD, CrowdStrike. All right, CrowdStrike. Ooh, we just got a sell signal on this one, skinny buff guy. Not actual buff guy like myself. He's a skinny buff guy. So we got a sell on May 6th. That was yesterday. The fear and greed already peaked around 85, 86. It's been contracting. The tech sector is still getting a little more greedy. The breadth on the tech sector has already peaked. Bro, I'm telling you, take your profits and run on this one. CRWD. Yikes. Here we go. Let me remove my drawings. Yikes. What day did that sell zone come through? The 6th? That was here. Oof. That would have already been a really solid exit. Look at this. Look at this. 5% down this morning. Now, a couple other things to note. Look at this order block, right? This order block that was created in February. Tell me order blocks don't work, because as soon as it came into here, 1 candle, 2 candle, 3 candles, all wicked up into this area, crash back down. Skinny buff guy, you had warning, my friend. You had warning that was the time to get out. All right, we'll do Hims long. The racing spirit wants to look at Hims long. Hims has been on a bit of a run lately, I think. Racing spirit. Simplify guy, I sent you a message on Discord. Please check it. Please check it. All right. We got a buy signal on April 29th on Hims, and it's getting more greedy. The staple sector has peaked. We talked about that. It's crossed bearishly right here. But this is what I want to look at, is this move right here. I think Hims has had a giant move up. Yeah, it did. When did that come through? That was on April 29th, which is, I'll just move this one over. April 29th. Can I move that? Why can't I move that? Still getting used to TradingView. It's only my second week on. Give me a break. I can't move that. Okay, fine. April 29th was here. So close to close, what did it do? Close to close, so far, it would be up 40%. Holy moly. Tell me that wasn't a great signal. Wow. 40. So from close to close, this is what I'm not like manipulating it. Close to close right now. Your 10, 20, 50 all crossed up. Boom. 40% up move. Good gravy. That was one solid buy signal. Now, looking at it from here, here's what I want you to do. Figure out what you are comfortable with on your trailing stop. Trailing stop is like your 10 EMA. You can see right here how it's moving up. Let's say, for example, that you got in at, let's say you got in here on the close, right? In fact, let me apply this as my opening. There we go. Look at that. So let's say you got in right here, and let's say you held it on this pullback, and that's okay, and it didn't hit your exit trigger, and now you're looking for a trailing stop. This is where you need to come up with the plan, because a giant 40% move like this, you want to keep as much as you can, but you don't want to cut off the trade early. So personally, this is what I do. I'm not telling you should do it. I'm just telling you what I do, is follow the 10 period EMA. Now, I know you're probably saying, but Chris, it's so far down. I know, I get it. It's 20% down. It's 20% down, but that's an enormous move right there. So if Hims continues up, you can ride it just like this. You can ride it just like this. A first close under the 10 EMA. That is a red light, get out of the way move, especially on this stock right here. Or wait for that sell signal to come through, or wait for it to peak on the fear and greed, right? You've got several options. You need to write them down and hold yourself accountable to this. Now, if you're ready to save time, make money, and start winning with less risk, be sure to click one of these 2 videos, and I'll see you in this afternoon's live stream. We'll talk soon.